Imagine walking into a fortified vault, putting your money inside a thick glass box, locking it, and then watching someone walk up with a vacuum cleaner and simply suck the bills out through a tiny hole. That is effectively what happens in millions of US checking accounts every single day. Banks legally pull money right out of your balance using a network of hidden fees. You don't have to buy anything to trigger this. You don't even have to make a mistake. The money vanishes passively while you're sleeping. We grow up thinking of a bank account as a highly secure vault where our money sits untouched until we need it. In reality, modern checking accounts function more like a bucket with a slow, deliberate leak. If you leave that leak unchecked, those microscopic drips add up. Over years, it creates a compounding loss of your savings over time. Let's look at exactly how they do it. The most common leak is the monthly maintenance fee. It sounds like a normal service charge, but you aren't paying for account repairs or extra features. The institution charges you a penalty of $10 or $15 a month simply for having an account open in their system. The only way to stop this charge is to keep a specific amount of money, usually around $1,500, sitting in the account at all times. If your balance dips to $1,499 for even a single day, the fee kicks in. This means the maintenance fee operates as a tax applied exclusively to people who lack the extra savings to avoid it. Then there is the cost of trying to access your own physical cash. If you use an ATM that doesn't belong to your specific bank, you get hit with an out-of-network penalty. Banks know you won't always be standing next to one of their specific machines when you need $20. You're at a concert or a corner store, so you naturally use the closest machine available. When you make a withdrawal, you pay on both ends. The third-party ATM takes a cut, and your bank takes a penalty. If you do this weekly, penalties repeat. By month's end, 4 small withdrawals can cost you $20 in pure fees. Banks monetize the fact that their own machine networks are limited, turning your geographic inconvenience into a profit center. But the most financially damaging trap in the US banking system is the overdraft fee. Let's say you buy a $3 cup of coffee, but your account only has $2 in it. Instead of a mild inconvenience, you trigger a flat penalty of roughly $35. If declined for a zero balance, your money stays put. But under overdraft protection, they approve the transaction and drop a massive fee block, driving you into the red. Once negative, every tiny purchase, gum, a bus ticket, triggers another $35 penalty block. Overdraft protection operates as a predatory, instantaneous loan that charges a massive penalty for a tiny math error. If we zoom out from a single checking account and look at the entire US banking industry, the true scale of these traps becomes clear. This chart shows the revenue generated strictly from maintenance and overdraft fees by top banks. This specific income stream reaches into the billions of dollars every single year, often towering over their traditional service income. These institutions rely on consumer inattention to sustain this cash flow. They count on the fact that most people are too busy to notice the steady drip of $5 and $10 charges. US banks have transformed these fees into a foundational pillar of their annual profits. To stop the drain, open your banking app and look through your last 30 days of transactions. Search specifically for the words fee, maintenance, or overdraft. If you see those words, it is time to look at different types of banks. Local credit unions and many online-only banks operate with zero maintenance fees and refuse to charge overdraft penalties. Updating your direct deposits and moving your bills to a new account takes a bit of work. It feels like a hassle. But spending an afternoon switching is minor compared to watching your money leak away year after year. You don't have to accept a leaking bucket. Proactively moving your money to a better institution is the only way to permanently close the drain and reclaim your financial control.